Hello traders, good afternoon. My name is Tomasz Wiśniewski. I'm a chief analyst in Alpari Research and Analysis, and this is our daily analytical report. Let me show you first the macro calendar. We need to know what is going to happen today on the markets. As you can see, the calendar today is first of all, it's not very busy, and second thing is that we already had the major numbers for today. So we had PMIs in Eurozone were better than expectations, and but it did not happen help the euro to climb higher. Euro dollar is reversing at the moment. So we're pretty the situation is pretty quiet from the fundamental point of view. We do not have any new developments from the trade wars. Thanks to that, we can focus on the technical trading, and actually that is what we are going to do now. So first of all, the American dollar to Canadian dollar. You know that I have a position here. I opened that 2 days ago. Here at first the price went higher, but then the correction ended and the price broke the midterm uptrend line of the correction and went lower. Yesterday the price made lower low. Today we broke those lows, but now the price is reversing, but it's not very strong reversal. The price can form a double bottom formation, but as for now, chances for that are limited. Why I opened a long position, a short position here, I will have to explain it one more time. Because of the weekly pattern here, that's two pin bars and also bearish engulfing, and also outside bar. And also there is a correction equality pattern, and the price also created a double top formation, broke the support of this double top formation. There was a correction, the price came back to the new downtrend, made new lows, so everything is bearish here, maybe apart from those last two candles, so a hammer and a positive candle here, but the situation is still under the bearish control and the price should decline. I opened here, my stop loss was here, now it's here, so I removed half of the risk from this trade because today the price made new lows, and this should continue. This lower lows and lower highs should continue. If the price will make higher high, it will mean a double bottom formation and a reversal, so I will have to escape from my position then, and I will be happy to do that with very, very low risk. So that is my trade on American dollar to Canadian dollar. Next one is the euro dollar, which made an attempt to break the downtrend line. It may be a false breakout, as we can see now, so false breakout may result with a further drop of this pair. Euro to Australian dollar made a interesting development here. First of all, we do have a false breakout above 61.8 here. That is a false breakout, and also we broke the lower line of this correction of this flag. Then we defended that as a resistance, and that is a sell signal. I think that even if you want to wait for the confirmation, you can wait for the breakout of this white, let's say blue area. So you can wait for the breakout of the blue area and then open a short position, because after the breakout of the lower line of this formation and then defending it as a resistance, that is a good selling opportunity, especially that we may start a big head and shoulder formation, so left shoulder, head and right shoulder. If so, even if this formation will not work out but will be created, you can get a occasion for 470 pips with a very low risk. So if you sell here, and even stop loss you can have here on 140, you can get excellent risk to reward ratio, 3 to 1. You can even have stop loss here on 100, so 4 to 1, 5 to 1, which can be an excellent trading opportunity. And I will actually think about opening a position there. Euro to Japanese yen, they failed to break the horizontal resistance. That is always important to wait for the breakouts, because here once the breakout would happen, we would have a strong buy signal. Breakout did not happen, so we do not have a buy signal. It still can happen, but the price is above the horizontal support here and a dynamic resistance and a horizontal resistance here. We are in a very tight range of 100 pips, but a breakout here should give us a strong buy signal. Breakout here should give us a strong sell signal, so that's why the price is now hesitating, because we are very close to a major trading signal here, so it won't happen overnight. Silver is testing the previous resistance, the previous support as a resistance. As you can see, this yellow area was a resistance, was a support, and then and is now being tested as a resistance. What is interesting is on H4 the price created two shooting stars on an important resistance that is an invitation to sell, and actually that is a strong sell signal. Why am I not opening here? Because I can see a bullish potential on gold, and gold and silver is correlated, so I don't want to. I would open a short position here if there would be a bearish situation on gold. But on gold we do have interesting not buying opportunity, because there is no buy signal, but it looks like an interesting buy signal. Nikkei broke this horizontal support that we mentioned before and is in a sideways trend, but we should see a further decline aiming the long-term uptrend line here. And we start instruments from the Trading Sniper video. First one is American dollar to Japanese yen. I do not mention this instrument too often, but I can see an interesting selling opportunity here. So first of all, we had an attempt to break the horizontal resistance here and the dynamic downtrend line here. Both were resistances, and we broke them, but the price went lower, which means that this is a false breakout above the horizontal resistance and above the downtrend line here. It should be like that. We also broke the midterm uptrend line here, so we have a false breakout and a breakout of the midterm uptrend line. Now the price is trying a reversal. Maybe we'll test this downtrend line again. We retraced 23.6, maybe we'll retrace 38.2, and then we will be ready for a strong drop. So that is an interesting situation to sell, but I'm looking for more confirmation here, maybe, or another try to break this resistance. I don't always go, I seldom go on M15, but what you have on M15 is a flag, or a wedge breakout of the blue line gives us a buy signal, a sell signal. Australian dollar to American dollar, they tried to create a triple bottom formation. We even broke the neckline of this formation. Triple bottom is supported by the divergence on MACD. I'm not a big fan of indicators, by the way, but the price is reversing, and I would love to see an upswing because I would love to sell. So there's a, on a weekly chart there is a huge downtrend, there is a correction, breakout flag and a downtrend. And look, last 3 weeks we are trying a reversal. The price has long tails. That can be a signal that we should see this reversal fairly soon. So this is this triple bottom formation. But for this reversal we need to wait a few days. Price closing above the green area will be a nice reversal pattern on weekly chart. On daily chart no, but on H4 yes, and on weekly chart yes. So price closing a week above the green area will be a buy for Australian dollar to American dollar. And now gold. I was telling you about the potential upswing on gold. Why am I seeing that? Well, first of all, you can see this is a weekly chart. And the price tested the 50% Fibonacci and recent lows from the December 2017, and the price is trying to create a hammer. Weekly hammer on such an important support can be a strong buy signal. So that is why I would love to wait a little bit with me entering with a long position, especially that on a daily chart we do have a bullish engulfing pattern here on the support, and on H4 we broke the midterm downtrend line. So yes, on H4 we do have two shooting stars as well as on silver, but on silver it is happening on an important resistance. On gold it is not happening on an important resistance because here we do not have any resistance. This can promote a further upswing because gold has no resistances ahead. If those instruments will be correlated, and usually those instruments are correlated. So that is why I am not entering a short position on silver. If there was a resistance on gold here, I don't think it's a resistance, then I would enter a short position, but there is no resistance here. Australian dollar to Canadian dollar is very close to see a major reversal. So first we got this head and shoulder pattern, breakout of the neckline, which triggered as a sell signal. But we are very close to deny this sell signal because the price is creating inverse head and shoulder pattern and is very close to break the downtrend line. So a price closing above the orange area will be a super strong buy signal. So far, sellers are defending the negative sentiment. So we can say that the sell signal is fairly safe, but we need to be cautious. We need to be cautious here. So far sellers are doing good, but I wouldn't sell seeing this inverse head and shoulder formation. Australian dollar to New Zealand dollar still inside of the long-term symmetric triangle, but most recently, as you can see, buyers try to break those highs, and on a daily chart created a shooting star, which may be an invitation to sell here. DAX is having a sideways trend. Here it's a tight range. Breakout of the lower line of this tight range will open us a way towards the gray area, and that's the neckline of this head and shoulder formation. And that can be potentially very dangerous for the buyers, because price creating such a huge pattern will be a good invitation to sell. But price breaking the upper line of this tight range can deny this head and shoulder pattern and drive the price towards the green area. And actually breaking the green area should cancel the negative approach to indexes and open us a way towards a new upswing. FTSE is still waiting inside of a flag. Breakout of the 38.2 gives us a sell signal. Breakout of the yellow area gives us a buy signal. S&P 500. Yesterday they had a chance for an inverse head and shoulder formation. And this is another example from the technical analysis why it is so important to wait for the breakout. Only the fact that we do have formation does not force you to go long, because every textbook will tell you that to use inverse head and shoulder formation you need to wait for the breakout of the neckline. And here the breakout of the neckline did not happen, and I told you that there is no buy signal here, that the buy signal will be created when the price will break the green area. The price did not break the green area, and we witnessed a strong drop, strong reversal. And now base scenario for the S&P 500 is breakout of the lower line of the flag here and a movement towards the blue area. And instead of the inverse head and shoulder formation, left shoulder, head and right shoulder, we can have a head and shoulder. So left shoulder, head and right shoulder. Bitcoin bounced from this horizontal support below $5,800, broke the midterm downtrend line and went higher. And now we do have a small correction, but on many coins we do have reversal patterns, so we can assume that this reversal will last at least for a few days. That is another resistance here, and I think that the price may try to reach this resistance marked with a blue line. Yes, like that. Next one is Euro to British Pound, where we do have a sell signal as we speak. So the price creating this ascending triangle pattern, we broke the upper line of this formation, and that was a buy signal, but the buy signal got cancelled today because the price was didn't manage to hold above the horizontal support. Buyers obviously hope dies last, and buyers can have a hope for this flag pattern, for example. But I think it's a bit too late, because if we would have a formation, that would be a wedge, something like that, and that line got broken, was broken as well. So inability to hold above the horizontal support is a sell signal, and the current target for the Euro to British Pound is the lower line of the ascending triangle, so the blue line. So I'm sorry, so Euro to British Pound should decline further to the blue line. Swiss franc to Japanese yen, still waiting for a trading signal, so breakout of the orange line, buy signal, breakout of the green line, sell signal. You see, trading is this simple. We don't have any artificial, superficial space instruments. Euro to Canadian dollar had of a nice sell signal, so we had a huge drop, then a nice flag which corrected 50% Fibo, then a drop again, and the price dropped the lower line, broke the lower line of the flag, which triggers sell signal. But if you want to be safe, you need to wait for the breakout of the orange horizontal support, and we are getting closer to that, and a breakout of the orange support will give us a strong sell signal. So the price getting here. Now British pound to Japanese yen. We are getting closer to the breakout of the green resistance, and once the green resistance will be broken, we will have a buy signal on British pound to Japanese yen. We had many bearish setups here. I even entered one bearish setup. I managed to earn some money, but I was thinking about more because the potential target for that drop was better, but my good money management skills during the trade helped me to capture profits before the price reversed sharply. And what I'm trying to tell you is that if the price has this head and shoulder pattern and does not want to use it, and the price does not want to decline, most probably there is a demand waiting for an occasion, and sellers are not convinced about the further drop, which means that we should get a breakout, and the price breaking the green area is a buy signal on British pound to Japanese yen. And remember that this price is very volatile, so that can be a good occasion. And there is a support here. Price breaking the blue line can cancel this positive sentiment here. New Zealand dollar to American dollar. Yesterday I told you about the possibility of a further upswing here. This upswing is happening, and the first target for this upswing is the green area. That is just a correction so far. We will see how this will develop. American dollar to Swiss franc, still waiting for a decision. So breakout of the red line, sell signal, breakout of the green line, buy signal. Simple as that. Trading is this simple, as I told you. Australian dollar to Swiss franc is trying to defend this horizontal support and lower line of the triangle. Once we will finish this week with a candle like that. So for now this is a doji, but maybe we'll have a hammer. Once we will have a weekly hammer on such an important support, we will have a buy signal. And New Zealand dollar to Swiss franc broke the horizontal support, is now reversing. They may reverse to the horizontal resistance, fair enough, but it still will be very shallow. We can go much deeper to here or to here. Personally, I would love the price to come back to here, to the blue area, but at the same time it would kind of deny this breakout below this horizontal support. So I think that the weekly candle is crucial here. There is a hammer which can actually deny this breakout and create a strong buy signal. So price closing a week be above the red area will be a strong buy signal. So we still have some time, but we did analyze all the charts. So now let me put them in the order. I think this euro to Australian dollar is nice. I think that American dollar to Japanese yen is very good, and then we will focus on them one more time. This is a good one. This is a good one. I feel that this British pound to Japanese yen can be a good occasion. So here are the main trades one more time. On the euro to Australian dollar, breakout of the blue area can be a strong sell signal with an excellent risk to reward ratio again. Stop loss 150 pips, take profit 500 pips. First take profit. You can even go more aggressive than this. So sell here and give a stop loss 120 pips. Take profit 400 because you open lower, not now. Also a nice opportunity. American dollar to Japanese yen, this is cool, and as you can see the price is not reversing after first shooting star. I would love to see the price going a bit deeper, like to 38.2 or to 50. 38.2 seems reasonable because of this support, this support, this support, this resistance, and we do have 38.2. So that is potentially good place to sell, and also a good place to sell with a great risk to reward ratio. Well, first target is here, right? But then we have horizontal targets. Like first one is here. Then we do have a support here, and the ultimate long-term support has to be taken from the weekly chart. So I'm talking about yearly lows here. I'm wondering if there is a correction in quality pattern. Let's check this. There is not yet. But what about impulses? Do we have impulses correction maybe? So this one was it the same as this one? There is a small difference. So if that's the case, we should get something like that in the long term, in a few weeks. So if we talk about the potential target and risk to reward ratio, it's huge. But as for now, we do have a continuation of this reversal price. Breaking the lower line of the flag will be a sell signal. Euro to British pound, actually we do have a sell signal now. Take profit here, so take profit 60 pips, stop loss 30 pips, 2-to-1 risk to reward ratio, quite interesting. Euro to Canadian dollar, that can be a good one. I would open this, but I already have a position on stronger Canadian dollar, and I would like to diversificate. I don't want to put all my eggs in the one basket. Like here, I do have a short position here. And British pound to Japanese yen also come back above the green area. In my opinion, that is a strong buy because we break those midterm downtrend lines as well. And yes, come back here will be a very nice buy signal. And that would be it as for the best occasions on the market. So thanks very much guys for attending the daily analytical report. For more trading occasions, you have to visit our Twitter account and our website outparty.news, and see you tomorrow, and we'll see where the price did go and if my position on American dollar to Canadian dollar is still profitable. Thanks very much and goodbye.